Hey everyone, RJ here. I've been investing full time for a very long time. However, I am not a financial advisor. This video is for educational and entertainment purposes only. Please do your own research before making any financial decisions. All right, let's cut to the chase. You ever feel like every time you step into a bank, you're taking a trip back to 2005? Well, that's because the whole banking game is outdated, but it's changing. While traditional banks are slow to catch up, there's one company that's already ahead of the curve, in my opinion, and that's obviously SoFi. And trust, SoFi isn't just some flash in the pan fintech. No, these guys are primed to absolutely explode once the Fed pivots. Stick with me because by the end of this video, you'll get why SoFi is not just surviving, but thriving in this new world of digital banking. So let's get into it. So if you're like me and invested, you're probably keeping a close eye on what's been happening with inflation and the Fed. We just got word that US inflation is cooling down, hitting 2.5% in August, which is a big deal. And if you're thinking, okay, so what? Well, this is where it gets exciting for SoFi. With inflation coming down, the Fed's probably going to start cutting interest rates. And this is where SoFi shines. Why? Because they've got a solid foothold in lending. And when interest rates drop, more people want loans. Simple as that. More loans mean more business for SoFi. Now, let me just discuss why that makes SoFi a winner here. They built themselves as this all-in-one financial shop that people can access, right, from their smartphones. No one wants to walk into a bank branch anymore, waste time standing in line, filling out forms. All that stuff is old school. SoFi's been capitalizing on that shift. They're offering loans, everything from loans to credit cards to investment services, all in one app. And let's be real, convenience is king these days. If you're giving people what they need without making them leave the couch, you're pretty much winning. All right, now back to the Fed. Everyone's talking about how the Fed is likely going to cut interest rates soon. 3 cuts by the end of 2024, that's what they're predicting. Now, what does that mean? Because lending has been tight, people aren't borrowing as much right now, and banks have made it tougher to get loans. But when rates come down, boom, those barriers drop. That's when SoFi's lending business kicked into high gear. They've already shown they can grow their lending products even when the environment isn't that friendly. So when things ease up, yeah, you can bet that they're going to start accelerating like crazy. Think about it. The demand for loans is only going to go up, and SoFi is perfectly positioned to meet that demand. More people are going to be refinancing, consolidating debt, and taking out new loans. And they're most likely going to turn to SoFi because of how easy they make the process. I mean, who doesn't want a quick and painless loan approval, especially through an app? Plus, they've got their foot in the door when it comes to student loans and personal loans. Areas that usually see major growth once rate comes down. Plus, they've got their foot in the door when it comes to student loans and personal loans. Those are areas that usually see major growth once rates come down. Now, I get it. There's a lot of noise about competition. You've got the big dogs like JP Morgan and Bank of America. Sure, they've got resources, they've got customer bases that are massive. But here's the thing, these guys are running on the old model. They've got physical branches, huge overhead, and they're slow to adapt. Meanwhile, SoFi, they don't have any of that. They're lean, they're nimble. They've got a direct connection to the younger, tech-savvy crowd who wants their banking digital and on the go. And yeah, there are other fintechs out there like Revolut. But let me hit you with this for a second. Revolut was valued at 45 billion. SoFi, they're sitting at 7.5 billion valuation right now. That's 6 times less than Revolut. But here's the thing. SoFi's financials aren't 6 times worse. In fact, SoFi's profitability is improving fast. SoFi's undervalued. We're talking massive upside here. If you're looking for a disruptive fintech with room to grow, SoFi's where you want to be. Another thing that has me impressed with SoFi is their marketing. They're not just throwing money at ads and hoping for the best. Their strategy is efficient and it's driving real results. They know that getting new customers on board is king to grow. And they've been able to do it without breaking the bank. That's a big deal because when you're a company like SoFi, you need to expand your customer base constantly. And that takes a lot of marketing. But the way they've been handling it, it shows that they're in control and they're not burning through cash just to grow. 2024 guidance basically backs that up. SoFi is expecting some major improvements in profitability compared to 2023. And that's big. A lot of people were worried about whether SoFi could grow profitability, but it looks like they're doing just that. They've addressed those concerns and now the market is starting to come around. And let's be honest, do you really think physical bank branches are going to be around forever? It's already happening. There's a massive shift away from them. Look at the numbers. The number of bank branches in the US peaked back in the 2007 2008 era, and since then they've been shrinking. It's not just some small trend. This is the future. Physical branches are expensive to maintain. You've got to pay for the building, the employees, the utilities, the whole deal. It's a ton of overhead and it's outdated. People don't need branches anymore. They've got their smartphones and they can do everything they need from home. So why would banks keep paying for a physical location? It just doesn't make sense anymore. But SoFi, they don't have that problem. They're purely digital, which means they can scale faster and at a lower cost. Now, being a disruptor isn't enough on its own. You've got to do it right, and SoFi is doing it right. Like I said, their profitability is improving rapidly, which means they're not just out here making noise, they're making real progress. That's what gives them an edge over traditional banks and even some other fintech competitors. The fact that they're able to grow in a tough economic environment is a strong sign. And as more people move away from traditional banks, SoFi is only going to keep growing. So, what's the bottom line? What's the point of this video? SoFi is in a killer spot right now. The Fed's pivot and the shift in banking behavior has already played right into their hands. Their business model makes sense to me. Their marketing is efficient and they're growing profitability. Yeah, competition is fierce and the stock's been volatile, but if you're thinking long term, SoFi's got what it takes to thrive. If you're looking for a fintech that's going to benefit from big changes in the banking world, SoFi is exactly where you want to be. That's why I'm so bullish on SoFi. They're undervalued, it's growing, and it's positioned perfectly for the future. That's it, guys. If you liked the video, hit the like button. And don't forget to subscribe if you want to see more videos from me.